Doldalao from yesfinanciallyfree.com. Hi, this is May Doldalao. Thank you for being a fan on my Facebook fan page, Finance Freedom Mastermind, and thank you for following me on YouTube. Really appreciate you all. We're going to start our live training today on the 7 levels of investors. So I have YouTube Live where you can always catch me on my blog. I blog live from my blog if you're watching now. Thank you for being a fan of my blog. It's yesfinanciallyfree.com. It's dedicated to making you financially free as fast as possible. So right now, all I'm doing my Periscope, and I'm also going to turn on hi guys on Periscope. This is May from yesfinanciallyfree.com. Thank you for joining me live. And I have Facebook Live, I have YouTube Live, and then I'm just gonna pop on my Instagram channel, which is also Finance Freedom Mastermind. And we're gonna get started with today's training, which is from Robert Kiyosaki's book, The Cashflow Quadrant. If you don't own it, buy it. I read it because a friend of mine who is financially free recommended that I get this book. So go ahead and pick it up, The Cashflow Quadrant by Robert Kiyosaki. So let me just start this last channel live and we're going to begin. And then I'm going to talk a little bit more about me. Hi, Tom Jones 3. Welcome to the Scope. Let me know where you're from. I'm in Honolulu, Hawaii. And I'm just setting up my lives here to get going. There we go. We're all set. We got Instagram. We are live on Instagram. Hi, Instagram. Welcome to today's live training. Okay, so let's begin. My name is May Doldalao. Welcome to the Scope. Thanks for joining in. Tap the screen, give me some hearts. So I am live on Facebook, my Facebook group, yesfinanciallyfree.com, and I'm also live on Periscope. Hi, YoungJock331, welcome. And also we are live on YouTube. And YouTube is where I broadcast on my blog, yesfinanciallyfree.com. Hi, Juan5701, welcome to the Scope. If you're on Periscope, my profile link is yesfinanciallyfree.com. You can click on there and you subscribe to my email list, and then you can get updates on when I do these live trainings. But I do them every Wednesday at 6:30 a.m. Now, who am I? Let's talk about who I am real quick. My name is May Doldalao. I am a mom. I used to work a full-time job at a bank here in Honolulu, Hawaii, and in 2009, I decided that I wanted to make money online, okay? Hi, Eli Labrat, welcome to the Scope. I also wanted more money in my life, so it was all at the same time. I want more money in my life, I want to make money online. Everything happened at the same time. So I decided, hi, hanging in with Mike, welcome. So I decided to start studying money, right? At the time, hi, Muryanka, welcome. I wasn't very good with money, you know. I remember one day that a friend met me for lunch and he asked me how I was, and I just started crying because that day I overdrafted, I think 2 or 3 times. I overdrafted like a utilities check, I overdrafted some other bill, and I had $90 in overdraft fees. I didn't have enough money to pay it, and I had $90 in overdraft fees. But I was mostly worried, not just because my money situation was bad, I was worried I would lose my job because at a bank, if you overdraft, you could get fired, all right? So I was like worried about my job, I was worried about not having enough money, and I had so many financial issues that I ended up going to credit counseling. I had like 7 different loans and lines of credit with over $46,000 in combined consumer debt. So consumer debt means credit card debt, personal loan debt, things like that, not a mortgage, okay? So I had like a kind of a spending thing going on. I was spending a lot of money on education mostly, but spending more also some different things like a bad boyfriend, lawsuits, all kinds of stuff. So I had a lot of issues going on around money. And hi, KTZT, welcome to the Scope. And so I decided I had to change because it just sucked, right? I hated looking at my mail because I was afraid it was a bill or some kind of a court order thing or something. I just hated money, thinking about it, and I was just tired of being stressed out all the time. So finally, I decided to change all that, right? So I just started learning about different things and practicing these things that I'd learned, like pay yourself first, at least 10% of everything you make. start researching investments and then just start investing for passive income. So I just started doing that. So after having about a net worth of like negative 33,000 with 46,000 in combined debt, I finally, in 2016, paid off all my debt. April of 2016, I was completely debt free. I was so excited, I have to tell you. I didn't declare bankruptcy. I just paid off all that debt. It took me a little while. Hi, Moral Asaglu. Welcome to the Instagram Live. So I was like, tell me where you're from, by the way. I was sick. You know, I finally paid off all that debt. Hi, Wesley, Orgent, and Danik OFC. Welcome to Instagram Live. Finally paid off all that debt. April 2016, paid off all that $46,000 of debt that I had and was completely debt-free, all right? That was really exciting because, oh my gosh, when I was in debt, the $46,000, I was making $12,000, not 12, $1,200 a month alone in just debt payments, okay? So when I became debt-free, I had an extra $1,200 a month that I didn't have to pay toward debt, that I could use towards saving for my financial freedom, or I could use toward buying something I liked, or whatever, right? And by then I was so in habit to do financial freedom that I was like investing more, making more passive income. Between 2009 and I got married, after 2009, in 2012 I got married to my husband, right? He had a debt of over $350,000. That included a house that was underwater and a second mortgage. Hi, Finkia, welcome. So after he married me, his debt has decreased to zero. He paid off all his debts. He had to short sale the house. On October 2015, he was completely debt free. All right, so me and my husband, we are completely debt free. So it's one of our highlights of our everything. FB Savannah, welcome to the scope. So we are completely debt free. Not only that, we started creating passive income because I was already starting to do that, right? Between me and my husband, we got paid over $1,000 a month in passive income. Average between, it started out a little higher because our dividends were higher and then they got reduced. But it ended up being, by the time I quit my job in December of 2016, we were making about $500 a month consistently in passive income. And that's from dividends. Some of it's from websites that I created that have ads running, mostly dividend income. It created passive income into our lives. So that's money that comes in no matter if we work, if we don't work, whatever, it just comes in, right? And then we transfer it into our bank accounts every month. So I got into the habit of doing that, creating passive income, paying myself, quit my job because I needed more time to invest, and I decided I would start teaching other people what I did to get out of debt and create passive income at the same time. Hi, 987. Welcome to Periscope, and thanks for joining my Periscope. Hope you're having a wonderful day. So I am in Honolulu, Hawaii. Hi, Julios. And recently, hold on one second. Recently, I bought a condo. So this is my new condo. Still have boxes in the corner. My husband and I together bought this condo. Hi, Super Life Dominator. Welcome to Instagram Live. And really excited to finally own property. Not only did we dig ourselves out of debt, my husband over $350,000 in debt, me over $46,000 in debt. We are completely debt free. Not only did we do that, we have passive income coming in every month. Not only did we do that, we bought a new condo, and now we actually have a place where we can call our home. So all these things are happening super fast. The next time you see me, I might be a millionaire. We actually have a net worth of about $500,000. Hi, hey, Retindimmer. Welcome to the scope. I actually have to check because our net worth is different now that we own this condo in Waikiki. We own a condo in Waikiki. That's where we live. We love Waikiki. We love the beaches. We love the shopping. We love the convenience. And we just love Hawaii. So that's my story. So if you want to become financially free, if you want to pay off all your debts, if you want to make passive income every month, and hi, Black Christian Well. Hi, Instagram followers. Welcome. Sorry, I didn't catch your name, but welcome. Thank you for joining in. Tell me where you guys are from, by the way. Anytime, pop in, ask some questions, right? I'm here to help everybody. Hi, Maggie1801. Welcome to Instagram Live. So what I want to do today is I just introduced myself. If you missed that, just rewind later, okay? But my name is May Dildalau. I do have a blog dedicated to making you all financially free, and it's called yesfinanciallyfree.com. And I'm actually broadcasting this webinar on it live right now. But if you go to yesfinanciallyfree.com and enter your name and email, you get on my email list, and then every time I do these trainings, I'll send you an email reminder so that you can know in advance what the topic will be, and you'll be able to jump on. Hi, Berkovich26. Welcome to Periscope Live. So thanks for joining in, and today we're going to be talking about the Cashflow Quadrant by Robert Kiyosaki. This book was recommended to me by a friend back when I was not doing well with money, like I told you guys, and I was I had a net worth about negative 33,000. I met someone who was financially free at 35, and he told me to read this book. So I read it. Okay, so I found people who were like me, who had financial freedom already, and who were young, like my age, and I did what they told me to do, right? So they said to read this book. So I'm passing on his advice to you. So if he told me to read this book, I highly recommend you go get a copy and read it if you haven't already. The Cashflow Quadrant by Robert Kiyosaki. So today we're going to talk about the 7 levels of investors. Hi, Max4800. Welcome to the scope. So I don't know if any of you guys are investors, any of you live viewers. Hi, Tana Kalins. Hi, Rob. Welcome. Welcome to the scope. Thanks for the hearts. So appreciate, love the love. You know, thank you for all the hearts. And if you're on Facebook, you can do the whole like thing. That's pretty cool. Ahmed, welcome to Periscope, and thanks for joining. Hey, what's up? What's up? So Maggie1801, welcome to Instagram. Okay, so in this book, Cashflow Quadrant, he talks about 4 different quadrants. Hi, Tropic, welcome. The quadrants are right here. I don't know if you can see that. I think everyone can see it. Hi, welcome. We got E, Istanbul. Istanbul is on the live today. Welcome, Istanbul. My name is May. Nice to meet you. E is for employee. This is a quadrant. Yeah, it's got 4 quadrants. Hi, LK Vesan. Welcome to the scope. So E is for employee, and that's if you work like I used to do. I used to work at a bank and get a paycheck. That's an employee. That's how I used to get cash and income into my life. S is a self-employed person. That's me now, right? Now I get money in my life because people pay me to help them become financially free, right? Right now you guys are on for free, which is totally fine. Hi, Korek. Welcome to the scope. But if you wanted me to personally help you become financially free and personally show you what I did, then you could contact me and pay me, and I would help you. And I have clients who pay me, so I make money that way. So that's S, self-employed. So I am currently self-employed. Hi, Eric81. Welcome to the scope. Only work on Wednesdays and for 40 minutes on like Tuesday and 40 minutes on Saturday when I have 2. All right, you are afraid to live in the center of the ocean. Someone on scope is looking at a map and he's thinking about the center of the ocean. But anyway, so I am a self-employed person now, right? I do financial freedom training for a living. I work very part-time, about 6 to 10 hours a week, sometimes less than that actually. A minimum of 3 hours a week, pretty much. And then 3 to 10 hours a week I work on my business, all right, which I help people become financially free. Love this business I'm in. It's so exciting. So much fun. Okay, and then there's the B, which is the business owner. A business owner is someone who owns a business where if they left it, it would keep going without them. And examples of that are like business owners who have died, but their businesses still survive them. That's a true business owner, someone who owns a business that runs without them being there. Okay, so that's a B. And then I is an investor. All right. Hi, Amin Ben. Welcome to the scope. Investor is somebody who makes money with money, and they pay themselves that money now in their working years. Okay, so I'm also an investor. It's like I told you guys, I make passive income every month. My son makes passive income every month, and he pays himself his passive income. I pay myself my passive income. Our joint accounts make passive income, so our joint accounts pay passive income to our joint account. And my husband makes his own passive income. And our business, my business makes passive income as well. That money goes into our business operating account. So we have passive income coming in from all directions. So I am a true I investor, right? And it's growing. I grow the passive income. every month. So my goal in all of these webinars is to help you become an an investor, right? So learning how to get money in your life right now, that you invest to make money in your life right now while you're in your working years, okay? Not waiting till you're retired, but doing it right now, all right? And learning to live off of your investments. So that's what an I is for investor. So today we're gonna focus on investors. Hi, Eric81. So one of my, hi, welcome to Facebook Live. Nice to see you. Let me know your name, where you're from. Fran Comester, welcome to Periscope. Okay, so let's dig into chapter 5 of Cashflow Quadrant. So I just explained to you what the quadrant was: employee, self-employed, business owner, investor. What are you? If you're watching, let me know what you are. I am a self-employed person and an investor. What are you? Right? A true business owner, by the way, when he talks about self-employed, he means you have a business or your own, trade where you have to do the work to make the money. And right now with my business, I have to be here to make the money. Although once I hire people, then I'll have a true business where I don't have to be here. Okay, so what are you? Are you an investor? Hi, Drox06. Are you an investor? Are you a self-employed person? Are you a business owner? Are you an employee? What are you in the Cashflow Quadrant? How do you bring money into your life? Okay. Next, we're going to talk about the seven levels of investors. All right. So the 7 levels of investors. There's different types of investors, and everybody is an investor. All right. Hi, Dashing Vic. According to this chapter, this is the Cashflow Quadrant by Robert Kiyosaki. It's a book, and we're doing chapter 5, 7 levels of investors. Okay, so let's talk about level number 1. Okay, and then we'll do a little intro. He has a little intro, which is kind of cool. So basically, Robert Kiyosaki is famous for his book Rich Dad Poor Dad, where he has 2 dads. One is rich and one is poor. Right? The poor dad is his own dad. The rich dad is his best friend's dad. Okay, and his best friend's dad ends up mentoring him and his best friend about money when he's a kid. All right, so he gets mentoring from his rich dad, who is his best friend's dad. Okay, and he gets mentoring from his poor dad. All right, so here he talks about his rich dad. All right, my rich dad once asked me, what is the difference between a person who bets on horses and a person who picks stocks? Okay, what's the difference between a person who bets on horses and a person who picks stocks? And Robert was like, I don't know. And he said, not much, right? Never be the person who buys stocks. What you want to be when you grow up is the person who creates the stock that sells, that brokers sell and others buy. All right, so that's what he said about stocks. So buying stocks is more like gambling. Hi, Sray Ray, welcome. But if you create companies and then you sell the stock in the companies, then you're not gambling anymore, right? Then you're creating real wealth and you're creating value for the economy. Okay, so for a long time, I did not understand what my rich dad really meant. It was not until I started teaching investing to others that I really understood the different types of investors, okay? So he wants to give a thanks to John Burley for this chapter. John helped him with he's one of the brightest minds in real estate investing. In his late 20s and early 30s, he purchased more than 130 homes using none of his own money. Wow, isn't that amazing? Hi, Boz, welcome to the scope. By the time he was 13, he was financially free and never had to work again. So like me, he chooses to teach. Right? But his knowledge goes far beyond real estate. He began his career as a financial planner, and so he has a deep understanding of the world of finance and taxes. But he has the unique ability to explain it clearly. All right, so we're going to talk about things that I guess he took from John Burley. Is it John Burley? Yeah. Okay, so here we go. The 7 levels of investors. Level 0. Those with nothing to invest. Level 0. Thanks for the hearts. So level 0 are people who have no money to invest. Okay, you have no money to invest. You're a level 0. So let's take a look. These people don't have money. They either spend everything they make or they spend more than they make. I used to be a level 0 investor. I used to spend everything I made. That was in my 20s. Every time I made money, I spent it. Hi, I2206. It's just like money came in, money went out. That was me. So I had no money in my 20s. I mean, I did. I made money, but it all went out. Like I spent it all. That was like my 20s, all right? If you haven't figured it out, I'm not 20, okay? But anyway, so these people, there are many rich people who would fall into this category because they spend as much or more than they make. Fortunately, this zero level is where 50% of the adult population is. Okay, so are you a zero level? If you are, it's okay. I used to be zero level, right? So if that's you, it's totally fine. A zero level person is someone, every time they make money, they spend it all right? And that includes 50% of the population. So a lot of people you see who have a lot of money, it's because they have a high-paying job, right? So all the money they make, they spend. So they might have a nicer car, a nicer home. Hi, Armenia, Armin, welcome to the scope. Thanks for the hearts. So even though people have a nice home, nice car, doesn't mean they're wealthy. They could be earning a lot and then spending it all, or maybe spending more than they actually have, right? You don't know. You don't know unless you see their books. Then you know if they're wealthy or not, okay? So level zero investor, level zero, you have no money to invest, right? Is that you? It's okay to admit it. Do you know someone who's a level zero investor in your life, right? So I actually know a lot of level zero investors, all right? But, and I used to be one, okay? So it's okay if you're a level zero investor. You got to start somewhere, as I put it. Hi, IXX BMW. Welcome to the Periscope. Thanks for all the hearts, guys. Really appreciate the love. Love is good. Level one investor. So level zero is you got no money to invest. So that's the first level. Okay, so we're going to go to level 6. There's 7 levels, but he labeled the first level 0. So 0 is actually the first level, but we're going to call it level 0. All right. Hi, Korek. Welcome to the scope. Level 1, borrowers. All right. These people solve financial problems by borrowing money. Okay. Often, hi, nice to see you. Often they even invest with borrowed money. Their idea of financial planning is robbing Peter to pay Paul. Okay, so they live their financial lives with their head in the sand like an ostrich, hoping and praying that everything will work out. Thanks for the hearts, so appreciate it, all right? You don't want to live that way, right? Borrowing, and hoping and praying that everything will work out. It's kind of like playing gambling or something, right? While they may have a few assets, the reality is that their level of debt is simply too high. For the most part, they are not conscious about money and their spending habits. Anything they own of value has debt attached to it. They use credit cards impulsively and then roll that debt into long-term home equity loans so they can clean up their credit cards and start charging again. Okay, so that's a level 1 investor, someone who invests with borrowed money. They borrow for everything. I used to be like that. So in my 20s, I was a level 0, okay? And in my early 30s, I was a level 1. I started borrowing, and that's how I got into the $46,000 of debt. Okay, and at the time, my salary was only about $35,000, something like that. So to have $46,000 in debt and only make $35,000 a year, that's a lot of debt for that kind of salary, right? Depends how much you make. That much debt might not be a big deal, but for me, it was a big deal. Okay. So I used to be level 1 as well in my early 30s. So anybody a level 1, you borrow everything, you borrow. You're hoping everything will work out. You borrow to invest. You borrow to buy things. You borrow to do everything in your life. Okay? The words low down, easy monthly payment always draw the attention of level 1 borrowers. All right? They often purchase depreciating toys like cars, boats, swimming pools, vacations. Right? They spend their money on things that go down in value. That's a level 1 investor. All right? Shopping is their favorite form of exercise. They buy things they don't need, and they say things to themselves like, go ahead, you deserve it, you're worth it. If I don't buy it now, I may never find it at such a good price. It's on sale. Okay, that kind of thing. They think spreading debt over a long period of time is smart. All right, always kidding themselves that they'll work harder and pay off their bills someday. And they spend everything they make and then some. They are known as consumers. Shop owners and car dealers love these people. If they have money, it gets spent. If they don't have money, they borrow it. Hi, UK Wildcat fan. Welcome to the scope. Thanks for joining in. So When asked what their problem is, they will say that they just don't make enough money. That's what borrowers will tell you. I just don't make enough money. No matter how much they make, they only get deeper into debt, right? Little do most of them realize that the money they earn today seemed like a fortune or dream to them just yesterday. But today, even though they have achieved their dream income, it is still not enough for them. They're still borrowing, borrowing, borrowing. I know a lot of people like that in Hawaii. Do you know anyone who is a level 1 borrower? I used to be like that. I'm not like that anymore, but I used to. And hi, Vanny MB29. Welcome to Instagram Live. So I used to borrow, and now I am not a level 1 borrower anymore. But I do know people who borrow a lot of money to live their lives, right? They borrow a lot of money from a bank to pay for a house that they can't afford, and then they spend all their money trying to pay off this mortgage and struggling with money and thinking about how they can make more money to pay off their debt because they bought a huge house which has a gigantic mortgage that they really can't afford. I know a lot of people like that in Hawaii. Hi, Matthews Giza. Welcome to Periscope. Thanks for joining my Periscope this morning. So we're talking about the 7 levels of investors, all right? Level 0 is those with nothing to invest, which is 50% of all people, all right? And then level 1 is borrowers, okay? So they fail to see that the problem is not their income, but rather their money habits. So borrowers have bad money habits, okay? They spend more than they make. They just can't stop their spending. They often argue with loved ones about money. They defend their need to buy this or buy that. They live in complete financial denial. Oh, I used to be like that. It was horrible. Pretending that miraculously their money problems will disappear someday, right? Or they pretend they will always have enough money because they pretend that their income will always come in and they'll always have tons of money. Hi, 250469. Welcome to the scope. And that's how they live their lives, okay? So this level of investor or borrower investor, they may look rich to you, okay? Because they spend a lot of money. So they may look like a rich person, all right? They may have a big house. They may have flashy cars, right? They may have nice clothes. They also make a lot of money, right? But they are one professional accident away from financial ruin. Hi, TR, welcome. Hold on 1 second, guys. So, okay, I had an ex-business owner in one of my classes. He was well known in the make big bucks, spend big bucks category, all right? He had a thriving chain of jewelry stores for years, but one downturn in the economy and his business disappeared. And his debts, however, did not go away. It took less than 6 months for those debts to eat him alive. Hi, Diego Cesar 2007. Welcome to Instagram Live. So he used to spend a lot of money. He owned all those jewelry stores. The economy went down, his business went down, and so did he. And his debts took him down in 6 months. He was in my class looking for new answers, refused to even entertain the idea that he and his wife were level 1 investors. Level 1 investors are borrowers, okay? He came from the business quadrant hoping to get rich in the I quadrant. He clung to the idea that he was once a successful businessman, could use the same formulas to invest his way to financial freedom. It was the classic case of a businessman thinking he could automatically become a successful investor, right? The rules of business are not always the same as the rules of investing. Unless these investors are willing to change, their financial future is bleak, unless they marry someone rich who will put up with their habits, okay? So level 0, hi Tugra Pusat, welcome to the Periscope. So level 0, you have no money to invest. Level 1, borrowers, you spend more than you make. Level 2, now we're on level 2, okay? Level 2 is savers, people who save money. People who put aside a small amount of money, usually on a regular basis, okay? The money is in a low risk, low return vehicle, like a savings account or a money market account or a CD, right? So someone who saves money on a regular basis and puts it in very low risk things, right? So that's not the stock market, okay? Things that when you put the money in, it grows. Hi, Birdie, 1690, welcome to the scope. Hi, Amra RRT, welcome to the scope. Thanks for joining in live, really appreciate you. Let me know where you're from. Hi, Rafis Ba, welcome. Hi, welcome to the scope. Where are you from? So we're talking about the 7 levels of investors. Level 2 is savers. If they have an IRA, an individual retirement account, They have it with a bank or it's in cash. I'm great, thanks. How are you? They often save to consume rather to invest. So they save for a new TV, or they save for a car or a vacation. They believe in paying everything in cash. Okay, so they're afraid of credit. I'm in Honolulu, Hawaii. Where are you from? And they believe they are afraid of credit and debt. Instead, they like the security of money in the bank. So that's a saver. Even when shown that in today's economic environment, savings gets a negative return after inflation and taxes. Welcome on to Periscope and to my scope. They are still unwilling to take on much risk. All right, so even though putting their money in a savings account gives them a negative return after taxes and inflation, they still don't want to do anything at a higher risk. Okay, because they like to have their money grow and they like security. Okay, so little do they know that the US dollar has lost 90% of its value since 1950. Holy cow. And continues to lose value annually at a rate greater than the interest a bank pays them. Holy smokes. Hi, Rosalo. Welcome to Periscope. Welcome to Scope. They often have whole life insurance policies because they love the feeling of security. Okay, so I'm a little bit of a saver. I have a whole life insurance policy. I also have savings accounts. So I regularly transfer to my savings. So I have a little bit of a saver in me. All right. I don't really save. I save that money to invest, though I don't really save it to spend. I have other accounts where I save to spend. So that I'm a little different. Okay. People in this group often waste their most precious asset, which is time. They're trying to save pennies all the time. They spend hours clipping coupons to go to the supermarket. They hold up everyone in line waiting for their big savings. Hi. Thanks for the hands up. Okay, so instead of trying to save pennies, they could have put that time into learning how to invest, right? So all savers focus on is saving, putting aside money, saving, saving, saving. They look for savings everywhere. Anything they can do to save, that's what savers do, right? They never spend any time thinking about how can I invest this money to make more. They never do that. They don't go out and try to invest. They just save, save, save. That's a saver, right? If they had put $10,000 into John Templeton's fund in 1954 and forgotten about it, it would be worth $2.4 million in 1994. So if they had left it there for 40 years, their $10,000 would have changed to $2.4 million. Hi, D123453. Welcome to the scope. Or if they had put $10,000 in George Soros's quantum fund in 1969, it would have been worth $22.1 million in 1994. Holy smokes, right? That's pretty crazy. Instead, their deep need for security, which is fear-based, keeps them saving in low-yield investments such as bank CDs. Okay, bank CDs only make like 1%. Hi, Aussie Dog 71. Welcome to the scope. Thanks for joining. So this is level 2. Level 2 are savers. Okay, saving money was a good idea during the agrarian age when people were all farmers and stuff, right? But once we entered the industrial age, savings was not the smart choice. Simply saving money became an even worse decision once the US went off the gold standard and we hit the era of inflation with government rampantly printing money, okay? The name of the book is the Cashflow Quadrant, the Cashflow Quadrant. By the way, you can rewind it if you missed the beginning, and you can see the other 2 levels of investors, all right? So this is level 2, which is savers, people who save, okay? All right, it is good to have some savings, all right? Robert Kiyosaki is not saying don't save, all right? It's good to have some savings. It is recommended that you have 6 months to 1 year's worth of living expenses held in cash. But after that much in savings, then it's better to put your money into investment vehicles, all right? Because you're going to make more money with it. To hold your money in the bank earning 5% while others are getting 15% and more is not a wise investment strategy. Hi, Al Gore. Welcome to the scope. So funny because if you put money in the bank, you're not going to make 5%. You're going to make like 1%. Even that's only if you use an online bank. If you use like a regular bank, you're going to make 0.02 or something like that. It's crazy how low it is, yeah? Really low. So a lot of people don't save anymore at all because they're like, oh, the interest rates are so low. But it is important to have at least, some people say 3 months, 3 months to 1 year of your living expenses. Like if you spend $3,000 a month, then you should say it's good to have at least $9,000 to $36,000 in your savings. So it is good to have some savings. Okay, it's not saying don't have any savings, but he's saying beyond that, you should be investing. Okay, but savers never invest. That's the thing about savers. All they do is save, 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 save. All right. Okay. So if you are unwilling to study investing and you live in constant fear of financial risk, then saving is a better choice than investing. All right. You don't have to think as much if you just keep your money in the bank, right? No thinking involved. Just put your money in the bank, leave it there. And your bankers will love you. Okay. Why shouldn't they? The bank lends $10 to $20 for every $1 you have in savings and charges up to 19%, then turns around and pays you less than 5%. Okay, so bankers love savers. If you put your money in the bank, they use that to lend to other people. So do you know any savers? Do you know any level 2 investors? Hi, Philiat, welcome to Instagram Live. So do you know anybody who's a saver, a level 2 investor? I do know people who save money, not as many as level 0 and level 1. The savers, it's not always easy to find savers. There are people who save money, but I can't think of any personally that I know. I know some savers. Usually most people don't save any money, right? They just spend, spend, spend. Hi, Eero, Kara, 1986, welcome. So let's review. Level 0 is you have no money to invest. Level 1, you borrow all your money. Okay, you spend more than you make. You borrow, borrow, borrow. Level 2 investor is a saver. You save a lot of money, but you don't learn to invest. Okay, so that's a level. Level 3. Now we're getting into level 3. Level 3 is smart investors. All right, smart investors. There are 3 types of investors in the group of smart investors. Okay, this level of investor is aware that they got to invest. Okay, they know they need to invest. All right, because if they leave it in the savings account, they're not making enough, right? So they know they have to invest. So they may participate in a 401k, a SEP, a superannuation, a pension, etc. So sometimes they even have outside investment in mutual funds, stocks, bonds, or limited partnerships. Okay, so that's a level 3 smart investor. These are intelligent people who have a solid education. They make up to 2/3 of what we call the middle class. All right, so that is a smart investor. Okay, so when it comes to investing, they are not educated. All right, they're not educated. And they lack what the investment world calls sophistication. All right, they don't read company annual reports or company prospectuses. Right? Hi, Gajam10, welcome to the scope. They are not trained to read financial reports. They lack financial literacy. That is a level 3 smart investor. They may have advanced college degrees. They may even be doctors or accountants or lawyers, all right? But they don't have any training in investing, all right? So there are 3 main categories in this level. They often make substantial incomes and they do invest. Here's the difference. Level 3A. Level 3A is I can't be bothered, all right? Don't bother me, all right? So these are the people who they've convinced themselves that they don't understand money and they will never understand money. And they say things like, I'm not very good with numbers. I'll never understand investing. I'm just too busy. There's too much paperwork. Investing is too risky. It's just too complicated. I prefer to leave the money decisions to the professionals. My husband or my wife handles everything, right? Hi, Lad. Welcome to the scope. So these people refuse to be investors, okay? They just say they're just not going to do it. So they just let their money sit and they do little in their retirement plan, or they turn it over to our financial planner who diversifies it, okay? So They block their financial future out of their mind. They work hard day to day, and they say things like, at least I have a retirement plan. So that's a level 3A investor. Do you know anyone who is a level 3A investor? Someone who doesn't think about money, doesn't like to think about it. He has financial planners who do it, or it just sits in a retirement account. They never look at it. They don't learn about it. They just let their money ride. Hi, YLWHRS. Welcome to the scope. That's a level 3A. Okay, so I know some people who talk like that. You know, they have money, but they leave it to their wife or they leave it to their husband. Hi, M61, welcome to the scope. It's not good to have money and leave it to someone else to control. You need to know what's going on with your own money, yeah? But anyway, so that's a level 3A investor. Do you know anyone like that? Okay. A level 3B. Level 3B is a cynic. Okay, these people know all the reasons why an investment won't work, all right? They are dangerous to have around. They often sound intelligent, speak with authority, and they're successful in their chosen field. But they are really cowards under their intellectual exterior, all right? They can tell you exactly how and why you will get swindled with every investment known to man. Okay, I do know someone who's a level 3B, all right? I know someone who's always talking about how everyone's swindling everyone and everything's bad. And yeah, I know people like that. Okay, so level 3B are people who are cynics. They're always saying everything's a scam. They're unwilling to invest because of that, all right? They often name drop and say things like, my brother at Merrill Lynch or Dean Witter. Name dropping helps cover their deep insecurity. Yet strangely, these same cynics often follow the market like sheep. At work, they're always reading the financial pages or the Wall Street Journal. They read the paper and then tell everyone else what they know at their coffee break. Their language is filled with the latest investment jargon and technical terms. They talk about the big deals, but are never in the big deals, right? They talk about money, but they never actually do anything about it. Okay? They look for stocks that make the front page, and if the report is favorable, they often buy. The problem is they buy late because if you get your news from the newspaper, it is too late. The truly smart investors have bought way before it makes the news. The cynic does not know that, okay? So when bad news come, they criticize and they say things like, I knew it. They think they're in the game, but they are really only a spectator standing on the sidelines. Wow. They often want to get into the game, but deep down they are terribly afraid of getting hurt, right? Security is more important than fun. So psychiatrists report that cynicism is a combination of fear and ignorance, all right, which turns into arrogance. So these people often enter major market swings late, waiting for the crowd or social proof that their investment decision is the right decision. Because they wait for social proof, they buy late at market tops and they sell at market bottoms just as the market crashes. So these are the people who lose a lot of money investing because they're buying at the wrong time, they're selling at the wrong time, okay? And then they always say they're getting swindled and, you know, all this stuff. So that's a cynic. Professional traders call cynics pigs. Wow, because they squeal a lot and then they run to their own slaughter. They buy high and sell low. Why? Because they're so smart. They have become overly cautious and they are smart, but they are terrified of taking risks and making mistakes. Okay, hi, Food for Marketing. Welcome to Instagram Live. All right, so these are cynics, which is level 3B. The worst part about cynics is they infect people around them, okay? The original cynics were an ancient Greek sect. They were despised for arrogance and sarcasm. Right? Hi, Octavio. Welcome to the scope. Do you guys know any cynics, level 3Bs in your life? Any cynics? Okay? So I know a lot of cynics, all right? They're people who seem to know a lot about money. They talk about it, but they can't do it. They're really bad at it, right? They're really bad at it. Okay, so now we're going to go to level 3C. Oh, this is a funny one. The gambler. I know a lot of people like this. All right, level 3C. This group is also called pigs by professional trainers, but while the cynic is overly cautious, this group is not cautious enough. They look at the stock market. Hi, CVS 380. They look at the stock market or any market about the same as they look at a Las Vegas craps table. Okay, it's just luck. Throw the dice and pray. All right, so level 3C are gamblers. This group, they have no set trading rules or principles. They want to act like the big boys, so they fake it until they make it or they lose it all right? The latter is most probable. They're probably going to lose it all. Hey, baby bay kid, welcome to the scope. So level 3Cs, gamblers, all right, they are searching for the secret to investing, holy grail, the one thing they need, the shortcut. They're looking for tips. They jump into commodities, IPOs, penny stocks, gas and oil, cattle, any investment known to man. Hi, Devil06, welcome to the scope. All right, so they're always jumping into these things, and they use sophisticated things like margins, puts, calls, options. They jump into the game. Hi, AVI444, welcome, without knowing who the players are and who makes up the rules. Okay, so that's a gambler. These people are the worst investors the planet has ever known. They always try to hit a home run. They usually strike out. When asked what they are doing, they're always about even or a little bit up. And actually, they have lost money, lots of money, often huge amounts of money. This type of investor loses money 90% of the time. Okay? They never discuss their losses. They only remember the killing they made 6 years ago. They think they are smart. They were smart and fail to recognize they were merely lucky. They think that all they need is the one big deal. Yeah, I know a lot of people like this. Okay, so these are gamblers, right? These are people who take their money and they gamble on everything. I know people who, I used to be in network marketing, and I knew people in network marketing who were like this. They're looking for the one big thing, the one secret. Hi, Ahmed3. Network marketers actually knew about these people, and they knew that they would come in and join their business, and that they wouldn't do any of the work. They would just throw money at different things, hoping to get rich at one of them. You know, hi FVV2. I know people who are gamblers. So if you're a level 3C, you're a gambler. Level 3B, you're a cynic, and level 3A, you're I don't want to be bothered. All right. So that's level 3. They're called smart investors. Thanks to the hearts. Smart investors with quotes. These are people who actually put money into investment funds, right? But they either don't know anything about it and don't care, and they have someone else do it. 2, they're cynics, so they're afraid of investing and actually learning what it takes, but they buy high and they sell low. Hi, Ken and Musa. Hi, FEV2. Welcome, welcome. Thanks for the hearts, guys. Thanks so much. Level 3C are gamblers. They gamble everything away, okay? Hi, welcome. Nice to meet you. Thanks for the hearts, guys. So level 3C, all right, gamble. They just like, okay, you know, let's go for it. And we're going to gamble our money away and lose most of our money. So that, I know a lot of people. Yes, I'm in Hawaii, Honolulu, Waikiki, actually. This is I'm inside my condo doing a training on investing. Okay, so anybody get your, okay, level 0, remember, nothing to invest. Level 1, borrowers. Level 2, savers. Level 3, smart investors. And level 3 has 3 levels. Okay, so 3A, remember, is someone who doesn't want to be bothered. Hi, crazy boy, welcome to the scope. Level 3B is someone who's a cynic and afraid and always buys high, sells low, and always lose money. And level 3C is a gambler, and they invest in anything and everything. Hi, thanks for the heart, the one heart, love your love. Okay, level 4, we're on level 4 now, long-term investors, all right? Long-term investors. Hi, Maher. Hi, Joro. Welcome to the scope. Level 4, long-term investors. Thanks for the hearts. So appreciate the love. Thank you, thank you. Level 4, long-term investors. These investors are clearly aware of the need to invest. They are actively involved in their own investment decisions. They have a clearly laid out long-term plan that will allow them to reach their financial objectives. They invest in their education before actually buying an investment. Hi, Al Chris, welcome. Thanks for the hearts, guys. So level 4 long-term investments, they actually learn about what they invest in before they spend the money and put it in. Thanks for the hearts, guys. Okay, so they invest in their education. They take advantage of periodic investing whenever possible. They invest in a tax-advantaged way. Most importantly, they seek out advice from competent financial planners. Thanks for the hearts. Please understand, this type of investor is not what you think of as some big-time investor. Far from it. All right? Hi, No-Go 11, welcome. It is doubtful they are investing in real estate, business, commodities, or any other exciting investment vehicles. Rather, they take the conservative long-term approach recommended by investors such as Peter Lynch of Fidelity's Magellan Fund fame or Warren Buffett. Hi, Vasan 12, welcome to the scope. If you are not yet a long-term investor, get yourself there as fast as you can. What does this mean, right? Minimize your debt and liabilities, live within your means, and then increase your means. Find out how much invested per month for how many months at a realistic rate of return it will take to reach your goals. Right? Goals such as what age do you plan to stop working? How much money will you need per month? Right? So long-term investors actually think about that. Like, how much money do I need to make per month, right? And how much money do I need to put aside to invest to get to that goal? So they're actually thinking that way, right? If you are, all right, simply having a long-term plan that reduces your consumer debt while putting away a small amount of money on a periodic basis, a top mutual fund will give you a head start on retiring wealthy. If you start early enough and keep an eye on what you're doing. At this level, keep it simple, don't get fancy, forget the sophisticated investments, just do solid stock and mutual fund investments. Somebody said Bitcoin. My brother has this Bitcoin. Okay, hi Gmail username, welcome to Scope. Interesting. Gmail username, huh? Okay. Welcome to Scope, thanks for joining. All right, if you start early enough, okay. So keep it simple, all right, don't try to outsmart the market. Use insurance vehicles wisely as protection, but not as wealth accumulation. A mutual fund like Vanguard Index 500 Fund, which in the past has outperformed 2/3 of all mutual funds year in and year out, is worth using as a benchmark. Interesting. Don't know what you're saying, but that's okay. Over 10 years, this type of fund may give you a return that exceeds 90% of the professional mutual fund money managers. But always remember, there is no 100% safe investment. Okay. Walmart. Oh, Walmart. Okay. Bye. Nice to see you. Okay, so Crazy Boy is leaving the scope. Okay, stop waiting for the big deal. Get into the game with small deals. And he talks about a small deal. Robert Kiyosaki's first small deal was when he bought his first small condo, right? So we bought our first condo. It's pretty exciting. So we'll see what happens next. Okay. We're actually living in this one. Okay, don't worry about being right or being wrong. Just start. You'll learn a lot more once you start putting money down, just even a little bit of money. Money has a way of increasing intelligence quickly, right? When you have money, you have a way. Once you start investing, you can start getting better with it as long as you start investing. So just start, and then you start getting educated, right? Because that's the point, is to become educated. Hi, Aslanal P22. Welcome to the scope. Start today, don't wait. Cut up your credit cards, get rid of doodads. Call a good no-load mutual fund, although there's no such thing as a true no-load fund. Sit down with your loved ones and work out a plan. Call a financial planner. Go to the library. Read about financial planning. Start putting money away. Start putting money away. Hold on, guys. Hold on 1 second. Okay. And start today, don't wait. Yeah? The longer you wait, the more you waste your precious asset, which is time. Okay, guys? So level 4 is where most of the millionaires of America come from. So there's a book called The Millionaire Next Door, and I read that book. It's really good. You should totally check it out. And it talks about how millionaires drive Ford Taurus, they own a company, live within their means, they study, they're informed about investing, they have a plan, they invest for the long term, they do nothing fancy, risky, or sexy when it comes to investing. They are truly conservative, and their well-balanced financial habits are what make them rich and successful over the long haul. So most millionaires are level 4 investors. For people who don't like risk and would rather focus on their profession, job, or career, instead of spending a lot of time on investing, level 4 is a must if you want to live a prosperous and financially abundant life. For these individuals, it is even more important to seek the advice of financial planners. They can help you develop your investment strategy, get you started on a right track for long-term investing pattern. This level investor is patient, uses the advantage of time. You start early, invest regularly, you can become phenomenally wealthy. All right, do you know any level 4 investors? All right, so I do know level 4 investors. These are people who, they're just diligent about saving money. They have financial planners. They study what they're doing, and they're growing their money as they're working. They live within their means. They don't spend more than they make, and they spend much less than they make because they save a lot of the money so they can grow their wealth. Okay, so that is a level 4 investor. So level 4 is where the millionaires are. Hi, JW and lots of stuff. Welcome to the scope. Okay, so level 5. We're on level 5, and then there's 2 more levels, okay? Hi, Dursun, welcome. So remember, level 0, you have no money to invest. Level 1, you borrow. You're a borrower. Level 2, you're a saver. Level 3, you're a smart investor with quotes, meaning that you either don't want to be bothered, so you just throw it in a retirement plan, don't think about it, or give it to someone else to handle, never think about it, never get educated. You're a cynic. You're always watching everything, but you're afraid, so you buy high, sell low, and lose a lot of money. Or you're a gambler, so that's level 3. Level 4 is a long-term investor, and that's where most of the millionaires are, all right? Okay, level 5 is sophisticated investor. Hi, Jim Pastry Gal. Welcome to Instagram Live. Thanks for joining. Hi, Tony201. Thanks for joining Periscope Live. All right, these sophisticated investors are level 5 investors. These investors can afford to seek more aggressive or risky investment strategies. Why? Because they have good money habits, okay? They have a solid foundation of money and also investment savvy. They are not new to the game. They are not focused. They are usually They are focused. They are usually not diversified. Hi, Perlanitas. Welcome to Scope. So these people, they are not diversified. They're focused, okay? That's a sophisticated investor. They are investors who buy investments wholesale rather than retail. Okay, they put their own deals together for their own use. Or they are sophisticated enough to get into deals that their level 6 friends have put together that they need investment capital for. Right? What determines whether a person is sophisticated? They have a financial base that is solid from their profession, business, or retirement income. Or they have a solid conservative investments. These people have their personal debt equity ratios in control, right? Which means that they have much more income than expenses. They have much more income than expenses. They're well educated in the world of investing. They're actively seeking new information. They are cautious, but they're not cynical. They are always keeping an open mind, okay? They risk less than 20% of their capital. In speculative ventures, they often start small, putting a little money down so they can learn the business of investing. Okay, be it stocks, a real estate syndication, buying foreclosures. If they lost this 20%, it would not damage them or take food off the table. Hi, Maxine again. Welcome to the scope. So these people, sophisticated investors, they start small to learn it, you know, and to see. And if they lose the money, they're okay, right? Because they start small, because they're learning. If people are sophisticated, they create their own deals with returns of 25% to infinity. Wow, right? Isn't that cool? And they are classified as sophisticated because they have the extra money, a team of hand-picked professional advisors, and a track record to prove it. As mentioned earlier, investors at this level put their own deals together. Just as there are some who buy computers right off the retailer shelf, there are some people who buy components, create their own customized computer system. Hi, Buzadam57. Welcome to the scope. Hi, Charo Mizu. Welcome to the scope. Thanks for joining. All right. So these investors know that bad economic times or markets offer them the best opportunities for success, right? Buy low, sell high. They get into markets when others are getting out. They usually know when to get out. At this level, an exit strategy is more important than entry into the market. Okay? They are clear on their own principles and their rules of investing. Their vehicle of choice might be real estate, discounted paper, businesses, bankruptcies, or new issues of stocks. While they take risk greater than the average person, they don't like gambling. They hate gambling, right? They have a plan and they have specific goals. They're not gambling. They know what they're doing. They study on a daily basis. They read the paper, read magazines, subscribe to investment newsletters, attend investment seminars. They actively participate in the management of their own investments, and they understand money and know how to make money work for them. Okay. Hi, Adam Sack. Welcome to the Instagram Live. Their main focus is on increasing their assets rather than investing so they can make a few extra bucks to spend. Okay. They reinvest their gains to build a bigger asset base. They know that building a strong asset base that throws off high cash yields and high returns with minimal tax exposure is the path to great long-term wealth. Hi, Tolga. Welcome to the scope. I didn't catch your whole name. Okay, so they often teach this information to their children, pass it on. They personally own very little, okay? Everything's owned by their business or something else. Do you know anyone who's a level 5 investor, a sophisticated investor? Anyone? Okay. Last level of investor is a level 6 capitalist, okay? Few people in the world reach this level of investment excellence. In America, less than 1 person in 100 is a true capitalist. Hi, thanks for joining the Periscope, guys. Capitalist purpose is to make more money by synergistically orchestrating other people's money, other people's talents, and other people's time, right? Often they are the movers and the shakers that allow America and other great countries to become great financial powers. They are the Kennedys, the Rockefellers, the Fords, J. Paul Gettys, and Ross Perot. It is the capitalists that provide the money, that create the jobs, the businesses, and the goods that make a country prosper, right? Level 5 investors generally create investments only for their own portfolio using their own money. But true capitalists, on the other hand, they create investments. Hi, Lloyd Tenar. They create investments for themselves and others by using the talents and finances of other people, okay? True capitalists create investments and sell them to the market. True capitalists do not need money to make money, simply because they know how to use other people's money and other people's time. Level 6 investors create the investments that other people buy, right? They often make other people rich, they create jobs, and they make things happen. In good economic times, true capitalists do well. In bad economic times, true capitalists get even richer. Do you know anyone who is a capitalist? Bye, Instagram Live. Instagram Live is ending. See you next week, Wednesday. Okay, so that one is done. But you guys are still on, so I still got Periscope, Facebook Live, and my YouTube Live. So we're going to keep going, and we're going to finish it up. So capitalists know that economic chaos means new opportunities. They are most often involved early in a project, product, company, or country years before the masses find it popular. Okay? And the returns of 100% to infinity are expected for capitalists. Hi, Kevin Claffey, welcome to the scope. So capitalists, they have huge returns, all right? Because they're making different things happen. They're making enterprises, businesses, they're creating opportunities that the whole country can become rich from. That's a capitalist. Okay, they know how to manage risk and how to make money without any money of their own. They can do this because they know that money is not a thing, but merely an idea created in their head, right? While these people have the same fears everyone has, they use that fear and turn it into excitement, yeah? They convert fear into new knowledge and new wealth. Their game in life is the game of making money. They love the game of money more than any other game, more than golf, gardening, or goofing off. This is a game that gives them life. Whether they're winning or losing money, you can always hear them say, I love this game. That's what makes them capitalists. Like those at level 5, investors at this level are also excellent stewards of money, right? When studying most of the people at this level, you often find they are generous to their friends, family, churches, and to education. Look at some of the famous people who founded our well-known institutions of learning. Rockefeller helped create the University of Chicago. J.P. Morgan influenced Harvard with more than money. Other capitalists who gave their names to the institutions they helped found include Vanderbilt, Duke, Stanford. They represent the great captains not only of industry but also of education. Today, Sir John Templeton gives generously to religion and spirituality, and George Soros donates hundreds of millions to causes he believes in. Also, don't forget the Ford Foundation and the Getty Foundation and Ted Turner pledging $1 billion to the United Nations. Hi, AB1488, welcome to the scope. So contrary to what many of the intellectual cynics and critics in our schools, government, churches, and our media say, true capitalists have contributed in more ways than just being captains of industry. Hi, oh, you're back. providing jobs and making a lot of money. To create a better world, we need more capitalists, not fewer, as many cynics would have you believe. Hi, Filter, and welcome to the Scope. In reality, there are many more cynics than capitalists. Cynics who make more noise and keep millions of people in fear, seeking security instead of freedom. As my friend Keith Cunningham always says, I've never seen a statue erected to a cynic or a university funded by a cynic. Hi, Aiden, welcome. I'm doing well, thank you. How are you? Okay, so do you know anyone who's a capitalist? Do you know any capitalists? So I do know one capitalist personally, and he makes money without any money of his own all the time, and he's growing richer and richer every day, and he does create jobs. He's not as big yet, you know, he's more of a Hawaii capitalist, but he's still really young. So I get 39. So capitalist is level 6. Okay, so let's go over it again. Level 0, I have no money to invest. That's a level 0. No money to invest. Level 1 is a borrower. They borrow money to invest. Okay. Level 2 is a saver. They save money, but they're too afraid to invest. Okay, hold on one second. Hold on one second. Level 3 is a smart investor. Smart investor means someone who's investing in stocks, right? They know they should invest. Hi, Barry from Omaha, but they're not really making money, or they don't know what they're doing. They refuse to get educated. All right, so level 3 investors are people who don't want to be bothered, don't get educated. They're cynics. They do educate themselves, but they're afraid. All right, so they make all the wrong choices. That's my husband. Level 3C is gamblers. Okay, level 4 investors. Level 4 investors are long-term investors. Okay, long-term investors are those who are millionaires in the United States. Long-term investors actually educate themselves. They don't invest in things unless they know what it is. So they actually research it and find out what it is before they invest. They invest for the long term. They live below their income so that they always have plenty of money to invest. And they usually are millionaires by the time they retire. Level 5 investors are called sophisticated investors. They make the deals that create money for them, all right? So they are out there creating their own deals. They're not diversified. They're usually very focused, all right? And they create their own deals. They have a board of directors running their companies. Let's see what else they say about them. They personally own very little. Nothing is found in their name for tax purposes, as well as protection from Robin Hoods who believe in taking from the rich to give to the poor. But although they own nothing, they control everything through corporations. And they control the legal entities that own their assets. So these are level 5 investors. They have a personal board of directors to help them manage their assets. They take advice and learn. This informed board is comprised of a team of bankers, accountants, attorneys, and brokers. They spend a small fortune on solid professional advice, not only to increase their wealth, but also to protect their wealth from family, friends, lawsuits, and the government. Hi, Whaley, welcome. Even after they have departed this life, they are still controlling their wealth. These people are often called stewards of money. Even after death, they continue to direct the fate of the money they created. That's a level 5 investor. Level 6 investor is the capitalist. Capitalists are the people who make money with other people's money, other people's time. They're capitalists like the Rockefellers, Stanford, Carnegie, Ford, Ross Perot, people like that. Those are the capitalists, and they create businesses, they create economies, they create wealth and money flowing, they create jobs. They're the ones who fuel a country's growth and prosperity. Those are capitalists, right? So those are the levels of investors. What level are you, right? Hi, Himas. I'm between level 4 and level 5. So like right now, I'm a long-term investor, but I'm also turning into a sophisticated investor because I also am not diversified. I'm very focused on my investing. Hi, Just Brent, 1968. And I do make my own deals sometimes as well. So I'm in between level 4 and level 5. But where are you at? What kind of level are you at? I'm also level 1 a saver, but I don't save past the mark. So, okay guys, thanks for joining me on this live webinar today. Hi Zen, welcome to Scope. The Cashflow Quadrant by Kiyosaki. We did chapter 5, the 7 levels of investors. So I hope you got a lot out of it, and I will see you again next week, Wednesday, same time, 6:30 a.m. Hawaii time at 12:30 p.m. Eastern Standard Time. And if you're not already, go to my blog, yesfinanciallyfree.com. If you're on Periscope, you just go to my profile. Definitely follow me on Periscope. Tap screen, give me some hearts, share this with your friends and followers. All of my scopes are about helping you become financially free as fast as possible, which I think is a noble purpose in this world. So I'm really excited about it, and I want to share it with everyone I can. So if you thought this was helpful for you, then share it with your friends and followers. Hi, Subtop. Subscribe to me on Periscope. If you're on YouTube, subscribe to me on YouTube. And if you're on Facebook, then there's also a link there. So yesfinanciallyfree.com is my blog. You can catch replays of all these webinars that I've done there as well. You can opt into the email list where I will inform you of future events that I'm doing. So you just put in your name, your email address, and get on my email list. And then I'll email you every time I do these live trainings with the topic ahead of time. All right? That's yesfinanciallyfree.com. So just subscribe to that email list. Hi, Ray1970. Facebook Live. I also have another website that Facebook Live channel has. It's financefreedommastermind.com. That's if you want me to personally mentor you. If you want me to personally help you, if you want to join one of my masterminds, and I will help you become financially free faster. That is financefreedommastermind.com. And then you can definitely go to that website and apply for a mastermind. Hi, Fluka07. You're not automatically allowed in. You have to apply. But if you are interested in me mentoring you, then go there and apply, and then I'll give you a call and we'll talk about it. So the worst that'll happen is you'll get a nice phone call and learn how to become financially free faster. No cost to you. To join the mastermind does cost money, but to apply does not cost any money. So if you want personal mentorship, then go to financefreedommastermind.com. Thanks for joining me on this Periscope live YouTube video and on Facebook Live today. I want to say aloha and see you next week. Bye, guys.